Based on the historical data and forecast, Bitcoin has shown a downtrend with significant volatility. The RSI consistently indicates oversold conditions, fluctuating between 21.7 and 40.6. The Bollinger Bands demonstrate widening bands, suggesting increased price fluctuations. Given the current oversold RSI and the forecast predicting a slight upward movement, I recommend a long position strategy. We will enter a long position at $87,900. The stop loss will be set just below the support level at $86,600 to mitigate potential losses if the downtrend continues. The initial target price will be $89,200, aligning with the first day's forecast. To refine the strategy, we will implement a trailing stop loss. If the price reaches $89,200, we will move the stop loss to $88,200, and if the price reaches $89,700, we will move the stop loss to $88,800. This approach aims to secure profits while allowing for further upside potential. The final target price will be $89,500, based on the forecast for December 5, 2025. This portfolio combines RSI-based entry, Bollinger Bands-informed target adjustments, and support level-based stop-loss protection to maximize returns while managing risk. Based on the historical data and forecast, Ethereum has been experiencing a downtrend recently, with prices fluctuating between the support of $2,790 and the resistance of $3,090. The RSI consistently remains below 40, indicating a prevailing bearish sentiment and oversold conditions. Considering the forecast data for the next week, the price is expected to hover around $2,890 to $2,950, suggesting continued sideways movement or slight downward pressure. Therefore, I propose a contrarian strategy leveraging potential rebounds from the support level. We will initiate a long position at $2,890, placing a stop-loss order at $2,840 to mitigate potential losses if the downtrend persists. Our target price will be $2,950, aiming to capture a short-term upward movement. To refine this strategy, we will incorporate the Bollinger Bands. When the price touches the lower band around $2,890, it signals a potential oversold condition and a possible bounce. However, if the price breaks below the lower band of $2,840, it confirms the downtrend, and we will exit the position. The combined RSI and Bollinger Band strategy provides a robust framework for navigating the current market conditions. This portfolio will prioritize a balance between capitalizing on short-term rebounds and safeguarding against further downside risks, with a focus on disciplined risk management and clear entry, stop loss, and target price points. Based on the historical data and forecast, XRP has shown volatility within a defined range of support at $2.04 and resistance at $2.22. The RSI indicator fluctuates between 31.5 and 48.7, indicating periods of both oversold and overbought conditions. The Bollinger Bands show that the price is currently approaching the lower band, suggesting a potential bounce. Considering these factors, I recommend a strategy combining RSI and Bollinger Bands. Initially, we will enter a long position at $2.08, coinciding with the forecast price on December 5, 2025. We will set a stop loss at $2.04, just below the support level, to limit potential losses. The target price will be $2.22, aligning with the resistance level, aiming for a potential gain of $1.14. To refine the strategy, we will incorporate RSI signals. If the price retraces to $2.08 and the RSI dips below 30, we will re-enter the long position at $2.08. The stop loss will remain at $2.04, and the target price will be adjusted to $2.22. If the RSI reaches 80 or higher, suggesting an overbought condition, we will consider exiting the position at $2.22 to secure profits. This combined approach leverages both momentum and volatility indicators to maximize potential returns while managing risk effectively. The most efficient portfolio will be a combination of the three strategies. Based on the historical data and forecast, BNB has been in a downtrend, with support at $841 and resistance at $895. The The RSI consistently below 50 indicates a bearish momentum, often dipping into oversold territory. The Bollinger Bands show the price fluctuating within a decreasing range, suggesting decreasing volatility and a potential for further downside movement. Given the forecast for the next 2 weeks predicting a continued decline, I propose a short selling strategy. We will initiate a short position at $858, placing a stop-loss order at $875 to protect against a potential reversal. The initial target price will be $846, aiming to capitalize on the predicted downward trend. To refine this strategy, we'll incorporate RSI and Bollinger Band signals. If the RSI falls below 20, indicating an oversold condition, we will hold the position, anticipating a potential bounce. Conversely, if the price touches the lower band of the Bollinger Bands, it might signal a potential reversal, and we'll consider adjusting the stop-loss or partially closing the position. If the price reaches $846, we'll secure profits by closing the short position. This combined approach leverages both trend analysis and technical indicators to maximize returns while minimizing risk. Based on the historical data and forecast, Solana is currently in a downtrend, showing signs of potential stabilization near the support level of $130. The RSI consistently hovers around 30, indicating oversold conditions. The forecast for the next week predicts a continued downward pressure, with prices ranging from $129 to $124. Considering these factors, I recommend a contrarian strategy. We will enter a long position at $127, placing a stop-loss order at $124 to limit potential losses. The initial target price will be $137, aiming to capitalize on a potential bounce from the support level. To refine this strategy, we will incorporate the Bollinger Bands. The price consistently trades near the lower band, reinforcing the oversold signal. If the price touches the lower Bollinger Band at $121, we will enter a long position with a stop-loss at $120 and a target price of $130. This approach combines the RSI and Bollinger Band signals for improved accuracy. The final portfolio will prioritize the Bollinger Band strategy due to its stronger indication of potential reversals. The most efficient strategy is to enter a long position at $121, set a stop-loss at $120, and target $130. Based on the historical data and forecast, TRON shows a slight downtrend with consistent trading within a defined range between $0.274 and $0.284. The RSI consistently remains below 50, indicating a weakening upward momentum, and recently dipped into oversold territory, hovering around 30, suggesting a potential bounce. The Bollinger Bands show that the price is approaching the lower band, which may signal a potential rebound. Therefore, I recommend a contrarian strategy focusing on short-term gains. We will initiate a long position when the RSI crosses above 30, aiming to capitalize on a potential bounce. Specifically, let's enter a long position at $0.277. Given the recent RSI levels and the proximity to the lower Bollinger Band, we'll set a stop-loss at $0.274 to protect against further downside. The initial target price will be $0.284, aligning with the resistance level. If the price reaches $0.284, we can consider moving the stop-loss to break even and potentially set a second target price at $0.29. This strategy combines RSI signals, Bollinger Bands proximity, and support/resistance levels to maximize potential returns while managing risk. Based on the historical data and forecast, Dogecoin has shown a decreasing trend, with the forecast indicating a potential further decline. The RSI consistently remains below 50, often dipping below 30, suggesting the asset is frequently oversold. The Bollinger Bands are narrowing, indicating decreasing volatility, and the price is approaching the lower band, further reinforcing the bearish outlook. Given this, I recommend a short selling strategy. The entry price will be $0.142, coinciding with the forecast price on December 4, 2025, and the lower Bollinger Band. The stop-loss will be set at $0.148, just above the forecast prices for December 1, 2025, and December 2, 2025, to limit potential losses if the price unexpectedly reverses. The target price will be $0.134, aligning with the lower Bollinger Band level from November 28, 2025, providing a reasonable profit margin. To refine this strategy, we'll incorporate RSI signals. When the RSI falls below 20, oversold, it presents a strong opportunity to initiate a short position. Conversely, if the RSI rises above 80, overbought, we'll consider covering the short position. In this case, the RSI is currently around 31.9 to 43.2, so we will wait for the RSI to fall below 20 before initiating a short position. The portfolio will be 70% short selling and 30% waiting for the RSI to fall below 20. This blended approach aims to capitalize on the prevailing downward trend while mitigating risk and optimizing potential returns. Based on the historical data and forecast, Cardano is exhibiting a clear downtrend, with consistent dips below the center of the Bollinger Bands. The RSI consistently remains below 30, indicating oversold conditions. The forecast for the next week projects further declines, nearing the support level of $0.407. Given this analysis, I recommend a contrarian strategy focusing on anticipating a potential bounce from the support level. We will implement a long position when the RSI rises above 25, targeting a quick profit before the anticipated continuation of the downtrend. Specifically, I suggest entering a long position at $0.386 when the RSI exceeds 25. Place a stop-loss order at $0.376, just below the recent low and the bottom of the Bollinger Bands, to limit potential losses. Set a target price at $0.42, aligning with the recent resistance level. This strategy aims to capitalize on a short-term bounce, anticipating a return to the prevailing downtrend. This approach balances risk with potential reward, given the strong bearish momentum and the proximity to a key support level. Based on the historical data and forecast, Bitcoin Cash exhibits a generally upward trend with periods of consolidation. The RSI fluctuates between 43 and 60, indicating neither consistently oversold nor overbought conditions. The Bollinger Bands show price movement within a range, with occasional touches of the upper and lower bands. Considering the support price of $528 and the resistance of $599, and the forecast showing a slight increase in the coming week, a moderately bullish strategy is recommended. We will implement a strategy based on the RSI, Bollinger Bands, and support/resistance levels. Our investment strategy will be a combination of the three signals. First, when the RSI falls below 40 and the price touches the lower Bollinger Band, we will enter a long position at $537. The stop-loss will be placed just below the support level at $527 to protect against a potential downturn. The initial target price will be set at the resistance level of $599. If the price reaches the target, we will consider taking partial profits and moving the stop-loss to break even. If the RSI rises above 70 and the price touches the upper Bollinger Band, we will exit the long position and consider a short position. This combined approach balances risk and reward, capitalizing on the upward trend while mitigating potential losses. Based on the historical data and forecast, Wrapped Beacon ETH shows a downtrend with significant volatility. The RSI consistently remains below 35, indicating an oversold condition, suggesting potential for a rebound. However, the forecast prices for the next week are fluctuating around 31.30 to 32.10, which indicates a sideways movement. Considering the support price of 30.20 and the Bollinger Bands, the bottom band is consistently near the support level, suggesting strong support at that price. Therefore, I recommend a contrarian strategy focusing on short-term bounces. We will enter a long position when the RSI moves above 30 and the price touches the bottom of the Bollinger Bands, which is around 31.40. The stop-loss will be set slightly below the support level at 3010 to protect against a further decline. The initial target price will be the center of the Bollinger Bands at 3210. To maximize returns, I propose a tiered target strategy. After reaching the first target of 3210, we will move the stop-loss to break even. If the price continues to rise, we will set a second target at 3350, coinciding with the upper end of the recent trading range. Finally, if the price shows strong bullish momentum, we will set a third target at 3430, based on the recent high. This strategy combines the oversold bounce with the Bollinger Band's volatility to manage risk and capture potential upside. The entry price is 3,140, the stop loss is 30.10, and the target prices are 32.10, 33.50, and 34.30. Based on the historical data and forecast, Wrapped Beacon ETH shows a downtrend with significant volatility. The RSI consistently remains below 35, indicating an oversold condition, suggesting potential for a rebound. However, the forecast prices for the next week are fluctuating around 31.30 to 32.10, which indicates a sideways movement. Considering the support price of 30.20 and the Bollinger Bands, the bottom band is consistently near the support level, suggesting strong support at that price. Therefore, I recommend a contrarian strategy focusing on short-term bounces. We will enter a long position when the RSI moves above 30 and the price touches the bottom of the Bollinger Bands, which is around 31.40. The stop loss will be set slightly below the support level at 3,010 to protect against a further decline. The initial target price will be the center of the Bollinger Bands at 32.10. To maximize returns, I propose a tiered target strategy. After reaching the first target of 32.10, we will move the stop loss to break even. If the price continues to rise, we will set a second target at 33.50, coinciding with the upper end of the recent trading range. Finally, if the price shows strong bullish momentum, we will set a third target at 34.30, based on the recent high. This strategy combines the oversold bounce with the Bollinger Band's volatility to manage risk and capture potential upside. The entry price is 3,140, the stop loss is 30.10, and the target prices are 32.10, 33.50, and 34.30. Based on the historical data and forecast, PAX Gold shows a clear upward trend, supported by the consistently high support price of $4,090 and the forecast prices trending upwards from $4,170 to $4,300. The RSI fluctuates between 50 and 66, indicating periods of both neutral and slightly overbought conditions. The Bollinger Bands have been widening, suggesting increasing volatility, with the price consistently moving towards the upper band. Considering these factors, I recommend a long position strategy. The entry price should be $4,170, coinciding with the initial forecast price. A stop loss should be placed at $4,090, just above the established support level, to protect against potential downside risks. The target price should be $4,280, aligning with the forecast price and providing a reasonable profit margin. To further refine the strategy, we'll incorporate RSI and Bollinger Band signals. When the RSI dips below 20, oversold, it signals a potential buying opportunity, but we've not seen this recently. Conversely, when the RSI reaches 80, overbought, it suggests a potential selling point, which we've approached. The Bollinger Bands indicate that the price is nearing the upper band, suggesting a potential pullback. Therefore, I recommend entering the long position at $4,170, setting a stop loss at $4,090, and targeting $4,280. This strategy combines trend analysis, forecast data, and technical indicators to maximize potential returns while minimizing risk. Based on the historical data and forecast, Artificial Superintelligence Alliance has shown a declining trend with a recent bounce. The support price consistently remains at $0.263, while the resistance fluctuates around $0.28. The RSI values, hovering around the mid-40s to mid-50s, indicate a neutral to slightly bullish momentum. The Bollinger Bands have been widening, suggesting increasing volatility, and the forecast indicates a further downward trend. Therefore, I recommend a cautious strategy combining RSI and Bollinger Bands. We will implement a tiered approach. First, initiate a long position at $0.265 when the price touches the support level and the RSI dips below 40. Set a stop loss at $0.259, just below the forecast low, to limit potential losses. The initial target price is $0.277, aligning with the center of the Bollinger Bands. If the price reaches this level, we'll move the stop loss to $0.272, near the previous support. If the price continues to rise and touches the resistance at $0.28, we'll adjust the target price to $0.286. If the RSI reaches 80 or the price breaks above the upper Bollinger Band, we will close the position to avoid overbought risks. This strategy balances potential upside with risk management, capitalizing on short-term bounces while protecting against further declines. Based on the historical data and forecast, Bitcoin Cash exhibits a generally upward trend with periods of consolidation. The RSI fluctuates between 43 and 60, indicating neither consistently oversold nor overbought conditions. The Bollinger Bands show price movement within a range, with occasional touches of the upper and lower bands. Considering the support price of $528 and the resistance of $599, and the forecast showing a slight increase in the coming week, a moderately bullish strategy is recommended. We will implement a strategy based on the RSI, Bollinger Bands, and support/resistance levels. Our investment strategy will be a combination of the three signals. First, when the RSI falls below 40 and the price touches the lower Bollinger Band, we will enter a long position at $537. The stop loss will be placed just below the support level at $527 to protect against a potential downturn. The initial target price will be set at the resistance level of $599. If the price reaches the target, we will consider taking partial profits and moving the stop loss to break even. If the RSI rises above 70 and the price touches the upper Bollinger Band, we will exit the long position and consider a short position. This combined approach balances risk and reward, capitalizing on the upward trend while mitigating potential losses. Based on the historical data and forecast, SKY exhibits a downtrend with increasing volatility. The RSI consistently hovers below 50, indicating a weakening momentum. The forecast suggests a slight recovery, but remains below the recent resistance level of $0.058. The Bollinger Bands show a narrowing range recently, suggesting a potential breakout. Considering these factors, I propose a cautious long strategy with a focus on short-term gains. We will enter a long position at $0.0451, placing a stop-loss order at $0.0435 to protect against further downside risk. The initial target price will be $0.0488, aiming to capture a quick profit from the predicted upward movement. To refine this strategy, we will incorporate RSI and Bollinger Band signals. If the RSI reaches below 20, which indicates an oversold condition, we will consider adding to our position at $0.0418 with a stop loss at $0.04. Conversely, if the price touches the upper Bollinger Band, we will consider taking profit at $0.059. The overall portfolio will allocate 60% to the initial long position and 40% to the RSI and Bollinger Band signals, dynamically adjusting based on real-time market conditions. This approach balances the potential for quick gains with risk mitigation and adaptability. Based on the historical data and forecast, Ether.fi has shown considerable volatility with periods of both upward and downward trends. The price has tested the support level of 0.677 multiple times, indicating a potential area of stability. The RSI values have fluctuated between 31.5 and 45.5, suggesting that the asset has experienced both oversold and overbought conditions recently. The Bollinger Bands have also widened, reflecting the increased volatility. Considering the forecast prices, which remain relatively stable around 0.74 to 0.75, I recommend a cautious, multifaceted strategy. My proposed strategy involves a combination of RSI, Bollinger Bands, and support/resistance levels. First, we will initiate a long position at $0.747 when the price approaches the forecast low. A stop loss will be placed at $0.677, coinciding with the established support level, to limit potential losses. The initial target price will be $0.803, near the recent resistance level. If the price reaches $0.803, we will consider moving the stop loss to break even to protect profits. Furthermore, if the RSI falls below 30, indicating an oversold condition, we will consider adding to the position at $0.754 with a stop loss at $0.684 and a target price of $0.853. This approach combines trend following with risk management, aiming to capitalize on potential upward movements while safeguarding against significant downside risks. Based on the historical data and forecast, plasma exhibits a declining trend, supported by consistently decreasing Bollinger Bands and a recent dip below the support price of $0.196. The RSI values, while fluctuating, generally remain below 50, indicating prevailing selling pressure. The forecast for the next week projects further decline, reinforcing a bearish outlook. Therefore, I recommend a short selling strategy. We will enter a short position at $0.197 on December 1, 2025. To mitigate risk, place a stop-loss order at $0.2, just above the recent high. The initial target price is $0.187, aligning with the forecast and a conservative profit margin. To refine this strategy, we will incorporate RSI signals. If the RSI rises above 80, indicating an overbought condition, we will cover the short position and secure profits. Conversely, if the RSI falls below 20, suggesting an oversold scenario, we will reevaluate the position and potentially tighten the stop-loss. The portfolio will primarily focus on the short selling strategy with adjustments based on RSI and Bollinger Bands. If the price reaches $0.187, we will secure profits and wait for another opportunity. The combined approach leverages both trend analysis and momentum indicators for optimal risk-reward management. Based on the historical data and forecast, DECRED has shown significant volatility, with a recent downtrend followed by slight recovery. The RSI consistently fluctuates around the mid-range, indicating indecision. The Bollinger Bands suggest periods of high and low volatility, with the price occasionally touching the lower band. Considering the support price of $19.4 and resistance of $28, and the forecast price fluctuating around $25.8 to $27.0, I recommend a cautious strategy focused on short-term gains. We'll utilize a combined approach incorporating RSI and Bollinger Band signals. My strategy involves a long position entry at $24, coinciding with a potential bounce from the lower Bollinger Band and a relatively low RSI reading. A stop-loss will be placed at $19.4, just below the established support level, to mitigate potential losses. The initial target price is set at $28, aligning with the resistance level. If the price reaches $28, we'll consider a partial profit taking and adjust the stop-loss to break even. A secondary target price is $30, contingent on a confirmed breakout above the resistance and a sustained upward momentum. This strategy balances risk and reward, capitalizing on potential short-term gains while safeguarding against significant downside risk. Based on the historical data and forecast, basic attention demonstrates a strong upward trend. The price has consistently been making higher highs and higher lows, supported by increasing RSI values. The forecast for the next week projects continued upward momentum, with prices expected to reach $0.281. Considering the RSI, which has recently crossed above 50 and is nearing overbought territory, and the Bollinger Bands, which are expanding, indicating increased volatility and potential for further price movement, I recommend a long position. We will enter a long position at $0.235. The stop-loss will be set just below the lower Bollinger Band at $0.22 to protect against a potential pullback. The initial target price will be $0.275, aligning with the forecast high for the week and the recent resistance level. To maximize potential gains and manage risk, we will implement a dynamic strategy. Once the price reaches $0.275, we will move the stop-loss to break even, securing the initial investment. If the price continues to rise, we will adjust the target price to $0.281, coinciding with the forecast high. If the price retraces back towards the support level of $0.267, the stop-loss will remain at break-even, allowing us to potentially re-enter the trade at a more favorable price. This strategy combines trend following, RSI and Bollinger Band signals, and dynamic risk management to optimize returns while minimizing potential losses. Based on the historical data and forecast, Quant exhibits a clear upward trend, supported by the consistently rising forecast prices from November 29, 2025, to December 5, 2025. The RSI consistently moves above 40, indicating positive momentum. Considering the recent price action and the forecast, I propose a long position strategy. Entry price will be $84.4, placing the stop loss at $84.1 just below the support level to mitigate downside risk. The initial target price will be $86.1, aligning with the first forecast price, with a secondary target of $90.6 for a more substantial gain. The Bollinger Band strategy suggests that the price is likely to stay within the bands, indicating a moderate upward movement. To refine this strategy, we will incorporate the RSI signal. If the RSI drops below 40, which it has done previously, it signals a potential oversold condition. In that case, we can enter a long position at $71.1, placing a stop loss at $70.4 and a target price at $81.1. Combining the Bollinger Bands and RSI, we can create a robust strategy. The final portfolio will be 60% based on the forecast price and 40% based on the RSI signal, balancing the potential for high returns with risk management. This combined approach should maximize returns while protecting against significant losses.